I'm retiring on Tesla stock, and as of today, my Tesla profits are $102,672 on my current stock positions, which isn't bad considering Tesla is down more than 20% from their highs in November. I'm already retired, and my living costs in Thailand are only about $1,500 per month, which is pretty much covered by just my Tesla puts. But I want to make everyone 6 or 7 figures with Tesla, and I really believe most of us can reach those goals over the next 5 to 8 years. My personal goal is to get my Tesla stock profits to a nice, sexy $1 million, and in today's video, I'm going to show you why I believe Tesla is the #1 best automotive stock to own based on the fundamentals. What I'm not going to do today is tell you how great Tesla is based on #1, their gigafactories, which are going to make them a much more profitable company. #2, their battery technology, which has them years ahead of the competition. And #3, their full self-driving technology and how autonomous driving will disrupt the entire world. Instead, we're going to dive into the fundamentals and compare the top automotive companies. My goal is to show you how and why Tesla is blowing by the competition, and the scary thing is this Tesla party is still just getting started. I really believe if you buy the world's highest quality companies and then hold them for the long term, you can retire in safety and splendor. Tesla is my largest position and a stock that I believe everyone should own. And if you've not done so already, please hit that like button and let's get this video over 725 likes. Go ahead, take a second and check the number of likes right now down below. Are we over 725? Let's see how high we can get the likes on this video. Thanks a lot for hitting that like button. I really appreciate it. And real quick, I want to give a fast shout out to a few members from our Discord group and our winning trades. All right, let's go over a few of our winning trades from our Discord. First off, we've got Beach Bums yesterday, and he picked up 33% gain on AOSL, which is Alpha and Omega, a semiconductor stock. Next up, we've got Wreaks Havoc on BPT, which is Prudhoe Bay, an oil stock. 329% profit. Nicely done, Wreaks Havoc. Then we've got Sparkhard, great return on latest BPT run. I've tightened my trail stop and will take profits thanks to Jerry in the community. He's up 67%. And our last one on the day to report is Alpha 84. Joining the Discord is the best decision I've ever made for my financial future. I've finally started to dip my toes into options and I'm learning and loving it. I've made a killing with INMD from Jerry's list a while ago, but never posted it. Thank you, Jerry. You're welcome, Alpha, and thanks to everyone for posting up your winning trades. We teach stock and option investing in our Discord, and if you want all of our live trade alerts, join us in Discord. Not only do we talk stocks and options, but we have real conversations with the goal of helping everyone to become better investors, and we regularly have profits that some people only dream of. That's not hype, that's what's happening every day in our group, and I really hope you join us. All right, now's the time to grab that huge cup of coffee and hang on, because this is not your normal stock channel. In order to understand the true power of Tesla and appreciate where they are going, I believe it's important that we compare Tesla to the top auto manufacturers with a side-by-side comparison, so we're going to jump into beast mode for a fundamental analysis. And I want to point out that 2 years ago, Tesla would not have been on the list because they were not profitable at that time. So what you are about to see is how fast Tesla has become a fundamentally strong company that is blowing past the rest of the industry. All right, we're now in beast mode stock analysis, and we're going to start with the smallest in the market cap, which is going to be Subaru, ticker FUJHY, and a market cap of 12 billion. Next up, we've got Ferrari, which is ticker RACE. Then we've got Honda Motors, ticker HMCA. We've got Stellantis, ticker STLA. And if you're not familiar with Stellantis, that's because they own all of these different companies, and that's their official name. So they own Fiat, Maserati, Ram, Dodge, Chrysler, Jeep, Peugeot, Citroen, and a few others. Then we've got General Motors, ticker GM, Ford Motor Company, ticker F, BYD Company, ticker BYDDY, Volkswagen, ticker VWAGY, Toyota Motor Corporation, ticker TM, and then Tesla, ticker TSLA. First thing I want to point out is our PE ratio, and generally speaking, the lower the better, and our lowest on the day out of all these guys is going to be Stellantis, coming in at 3.2. Up next, we've got Ford, which is very low at 3.8, and then we've got BYD Company coming in on the high side at 206.2, as well as Tesla coming in high at 172.5, and I'll talk more about PE ratios at the end of this video. The beast mode fundamental analysis is broken down into sections, and I think that really makes it easy to understand fundamentals when you present the data the right way. Our first section is the income statement, and this tells us whether or not the companies are making money. And our goal today is to compare Tesla with all of the other companies. And also, the beast mode is color-coded, where the most important field for each section is the light blue, and the second most important is the green. So for Tesla, we want to compare them to everybody, and if we look at the operating margin, we always want that to be above 10%. Our highest on the day is going to be Ferrari, Ferrari coming in at a very impressive 25.15%. And I'm really not that surprised with Ferrari coming in that high because they're a very high-end product, very specialty. They've got a much lower sales volume because they're so expensive. So it's reasonable to see that they would have a higher operating margin as well as a net income margin. And we can see they're the highest in both of these fields. But after that, who's the highest? Well, if we look at everybody, guess who it is? It's Tesla coming in at 12.07. And I want to stress, 2 years ago, this company wasn't even profitable. And in those 2 years, they have skyrocketed by all of these other companies on operating margin. Now, if we look at the net income margin, we've got a similar story. Ferrari is the highest, again, no surprise. The second highest is going to be Ford at 13.16%. And they've actually brought their profit margin up the last couple of quarters. So good for Ford on that. And then after that, we've got Tesla coming in at 10.25, and everybody is below that. So Tesla has really closed the ground, and as they get more efficient, their net income margin is actually going up higher and higher, and it is mind-boggling that they have blown past all of these very well-established and well-seasoned companies in just 2 years, and it's going to get even better. Trust me. Up next, we've got the balance sheet, and this tells us whether or not the companies are financially stable. And I like to look at what's called the Tattle ratio, and that's where we compare the total assets to the total liabilities, and we always want that to come in above 1 and ideally at 2 or higher. So if we come over and we look at Tesla, we can see they're at 2, and that's because their total assets are $62.1 billion and their total liabilities are $31.1 billion. So they've got a Tattle ratio of 2, and the higher that number, the better. The only one that's got a higher Tattle ratio is going to be Subaru, coming in at 2.1. So in terms of financial stability, these guys are exceptionally strong, and they've got a 2-to-1 ratio on their assets to the liabilities. Impressive. Next up, we've got the key performance metrics, and these are all very insightful to the company's overall condition. What we don't want to see here are red numbers. What we do want to see is a lot of black and blue. Now, if we start with Stellantis, we can see they're dominating most of these categories, and the reason why is because they're a relatively new corporate entity that houses all of these different brands, and I believe it's less than 2 years old, so that's why they've got such high growth numbers, and it really skews these numbers. So what I'm going to do right now, I'm just going to delete STLA from the equation, and then let's see what happens. All right, now that STLA is out of the picture, look what happens. Tesla becomes the dominating factor here. So for revenue growth last year, Tesla was the clear winner at 70.67%. The next highest one was BYD company at 31.49%. And then if we look at all of the others, they're relatively low. Some of them actually lost ground last year, and that's a really big concern. The other one that's actually gained ground last year that's a bit of a surprise is Ferrari at 14.66%. Next up, we've got the free cash flow margin. This is something that's really important. We always want that to be in the black. The higher that number, the better. We can see our winner on the day here is Ferrari. No surprise. High end, better margins to be expected. After that, we've got BYD, very high, coming in as a surprise. And then respectable is going to be Tesla at 9.26%. Now, the Rule of 40 indicator, this is a great one, and this is a ratio that measures a company's combined growth rate and profit margin. And many venture capital and growth equity investors believe this ratio should exceed 40%, especially for software companies. And this is something that I love to use on growth companies, and I still consider BYD and Tesla to be a growth company. So let's see what the Rule of 40s are. The winner on the day here is going to be Tesla at 79.93%. Very impressive. Next up, we've got BYD at 53.12%. And again, this is to be expected because these are up and coming companies and they do have a higher PE ratio. After that, well, we can be a little bit surprised here because Ferrari, again, is doing very well. I mean, it's really surprising just how strong Ferrari is when you look at the fundamentals, but we can see Tesla again is our clear-cut winner. And then after that, we've got the FNR indicator, and this combines the free cash flow, the net income margin, and the revenue growth. And this is my own metric, and the higher the percentage, the better. Who's the winner? Well, no surprise, it's going to be Tesla at 90.18%, and it's by a large margin. Next up, we've got the management effectiveness, and this is how well management is generating returns for investors, and the higher that percentage, the better. Our winner on the day here is actually Ford at 45.2%, and then we also have Ferrari coming in very strong at 42.2%, and then we've got Tesla at a very respectable 20.4%. So this is a growth stock. They are getting better, but in this category, they are beat out by a few of the others. And then if we come down to the 5R indicator, this simply sums up all of our return on fields, and the higher that percentage, the better. Again, we've got STLA, they're winning this race, and the main reason they're winning is because they're a new company, so they don't have the long history, where if we throw them out of the equation, then our winner here is going to be Race, which is Ferrari, and then our number 2 is going to be Tesla at 76.2%. So Tesla is very strong, and remember, Race is more of a specialty auto company because it's such a high-end company. For the capital ratios, I like to look at debt to equity, and this is going to come as a shocker to some of you guys. The debt to equity ratio compares a company's total liabilities to its shareholders' equity and can be used to evaluate how much leverage a company is using. Higher leverage ratios tend to indicate a company or stock with higher risk to shareholders. The result is the dollars of debt for every dollar of equity. Compare the ratio to other similar companies. So here we've got a down arrow, and that just means we want the lowest number possible. That makes sense. So our winner on the day here is Subaru at 0.19. But check out all of these other ones. Most of them are much higher, and check out Ford, 2.86. Who's our number 2 company on this list for debt to equity? It's going to be Tesla, coming in at a very low 0.26. So that is phenomenal for Tesla. And the last section we want to look at on the beast mode is going to be the growth metrics, and companies should be consistently growing their business. So we can see right now that very high on this with a lot of blue is STLA. So let's go ahead and eliminate them because they're a new company. So that skews these numbers just a little bit. And now let's see what happens. So for the net income growth, our winner on the day here is Ford. They've had to have something really major happen because that's an unreal number. We need to dig into that a little bit deeper to see what's going on there. Maybe that has to do with their Ford 150 Lightning and pre-orders. I'm not exactly sure what's going on there, but that number makes me question it just a little bit with what goes into it and how they're accounting for it. So let's take Ford out of the picture very briefly and then look at Tesla. 665% for net income growth. Next up, we've got BYD, which we would expect a higher PE ratio, a growth stock. So they're coming in at 181.3%, which is very nice. And then after that, it goes down very quickly, but GM is not too bad at 55.9%. Honda Motor Company, 42.9%. Ferrari, very strong at 27%. And then we got a couple of red flags here with Subaru Corporation, negative 50%, and Volkswagen at negative 30%. What I'm trying to show you is whenever you compare Tesla to all of these other companies on most of these key important numbers and data points, Tesla is coming in very strong. We can also look at the EBITDA growth, and this is the net income or earnings with interest, taxes, depreciation, and amortization added back. And here, the higher that number, the better. So if we look at this, who's our winner? Well, again, it's going to be Tesla at 118%, followed by BYD at 64.4%, and then it drops off quick. So again, a clear-cut winner with Tesla. And now I've scrolled back up to the top, and I want to reveal to you the revenue growth forecast moving forward, and this kind of brings it all home. So what we want to compare is the revenue growth forecast with the net income margin. So if we look at Subaru, the revenue growth forecast is negative 2.9%, not good. Their net income margin is 2.7%, not good as well. So that doesn't look very good. And then we've got Ferrari, revenue growth forecast 12.4%, net income margin very high at 19.45%, not bad, but the revenue growth is just okay. Still, they're a high profit company, and this is a company that I like, and they have performed very well. Next, we've got Honda Motor Company, their net income margin is low. Then we've got Stellantis, and their net income margin is okay, and their revenue growth forecast is okay. GM is looking really good on the revenue growth forecast at 20.7%, and their net income margin isn't bad at 7.89%, but as good as it is, it's still lower than both of those figures for Tesla. Ford, they've got a revenue growth forecast of just 7.8%, but they've got a good net income margin. We've got BYD, a growth stock, a very good revenue growth forecast of 40.9% moving forward. Their net income margin is 2.7%. So this is a really good revenue growth forecast, and their net income margin is going to get higher as they get more experienced and build more cars. So these are not bad numbers, but they're still not as strong as Tesla. Volkswagen, 8.1% for revenue growth forecast, and their net income margin is only 3.98%, not great. We've got Toyota Motor Company, a revenue growth forecast of 14.3%, which is pretty good, and their net income margin is 8.25%. And then look who blows all of these other guys away. Tesla, revenue growth forecast 55.5%, and if we come down to the net income margin, it is 10.25%. Extremely strong, hands down, no-brainer. The winner is Tesla. And now I want to talk about the PE ratio a little bit. I can only compare 5 companies, so we're going to compare Tesla, GM, Toyota, Ford, and Ferrari, and this is for the PE ratio. Tesla is this blue line right here, and whenever they had a negative PE ratio, it would have been below the 0 line, so that's why they're not marked here, and then realize that they just became profitable whenever their PE ratio went positive at 511, and that was back in the second quarter of 2020. So they skyrocketed all the way up with a real high PE ratio of 1,102. 2, and then we can see in a very short time after that, watch what happens to their PE ratio and watch how the company's order changes. Their PE ratio is coming down as they're becoming more and more profitable, and so we can see Tesla 661, and right now they're starting to slow down, but they're still going down at a very fast pace, and their current PE ratio right here is showing at 215. Now all of these other companies, they're pretty much flatlining because they are very well established companies. They've already brought their PE ratio down, and give Tesla a little bit more time, and this is going to continue coming down as well. And as you can see from the fundamental analysis, their profits are increasing and their revenues are increasing faster than anybody else, and as that happens, that PE ratio is going to continue to go down, and that's why their higher PE ratio doesn't concern me as much. Now let's look at the net profit margin, and again, this blue line is Tesla. Whenever they weren't very profitable, we can see their line, but we can see that they're trending up. And now let's jump forward over to the first quarter of 2020. And what I want to show you is right here, Tesla is negative 0.52% on the profit margin. And now let's go quarter by quarter, and I want you to notice how Tesla moves up in the charts. The next quarter, they're at 1.46%, and they're now more profitable than GM, and Ford at that time was losing money. We come forward another quarter, 1.89%. The next quarter, 2.29%. 3.18%, 5.21%. You notice they're trending higher and higher, and we can also notice that Ferrari is racing at the top at 20.93%. So impressive for Ferrari. Then that's quarter 2 of 2021. We're going to move forward another quarter, and in quarter 3, Tesla's at 7.47%, and then we move up to the current one, and they're at 10.25%, and we can see they are steadily gaining and passing all of these other companies, and I'm going to say that in probably 6 months to a year, they're going to be at the top of this chart, except for maybe Ferrari. And now let's address a few of the challenges facing Tesla. Number one is competition. The EV race for dominance is still in its infancy. While Tesla is the clear-cut leader right now, they are going to face competition, and they will, I repeat, they will lose market share in some markets, so don't be surprised when that happens, especially in the USA, which they currently dominate. However, the demand for EVs is growing, and they can lose a large percentage of market share and still double or triple their production to meet current and future EV demands. And number two, Tesla is overrated. This is a real hard one to push under the rug because based on traditional valuations, Tesla really is overvalued. But, and this is a huge but, the market value of any company is what a ready, willing, and able buyer is willing to pay. And based on market capitalization, Tesla is currently the 5th largest company in the United States and trades over 20 million shares per day. For those that argue Tesla is overvalued, I would submit there are 20 million shares being traded daily. So it's easy to buy or sell Tesla anytime, and that liquidity gives you a safety net if you ever want to sell out. To sum things up, based on the fundamentals, we can see that Tesla is more profitable, growing their revenues faster, and blowing past the competition. When you combine their fundamentals with their gigafactories, operational efficiency, and technological advancements, they are a no-brainer for the best auto stock to invest in for the long term. And if you're a Tesla hater, I really welcome your comments down below. Prove me wrong, flame me, blame me for your miserable life, or just get something off your chest. Drop it in the comments down below. And if you are a Tesla lover, drop a comment below and tell me something I don't know about Tesla or how much money you've made with Tesla stock. This should be a lot of fun. And one more final thought and thank you. Ken, better known as Chicken Genius Singapore, is quitting YouTube, and I loved his videos for their authenticity. He was truly one of the good guys on YouTube, and I'm going to miss his videos and that spatula. So no sign off today. Instead, let's do 10 seconds of silence to honor Ken the Chicken Genius Singapore and wish him well in all he does.